All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today is January 14th, 2026. $92. Good God, $92 silver. Yesterday, we were talking about the shiny. It was a little quiet in the morning. And then while I was doing my live stream yesterday, silver went from like 85 to 86, 87. We were watching it go up. And I said, hey, guys, by the end of this week, we're going to be talking about 90. Here we are, not 24 hours later, not 90, not 91. We hit $92 silver, 92 and change before pulling back. We're in the mid 91s right now. Where is this going to stop? Nobody knows. Hey, gold is along the ride, up another $40 or so, around 46.40 today. The price in Shanghai is over $100. Guys, metals are just ripping here. What the hell is going on? Well, we've obviously got some kind of a short squeeze that's been going on for months now. The metal's just moving up in a straight line. We've got the dollar debasement trade is very much in vogue again. Both going up together, gold and silver, but silver way outperforming gold here. The gold to silver ratio is around 50 right now, threatening to move into the 40s, somewhere it hasn't been since 2011. We've got the money supply is expanding at an astronomical pace. We've got a Federal Reserve that is debating between whether or not they want to cut rates and print money or cut rates and print money even more like the president wants to do. Like, that's the big debate. We've got the government is buying mortgage-backed securities with borrowed and printed money, trying to juice the housing market higher. Is it really a wonder? Do we need to look around for reasons why silver's moving higher this morning? Is it really so hard to find a reason why silver is moving higher? And I'll be honest with you, the only thing that makes me nervous here is not the fact that it's going higher. It is just ferocity of this move. I've never seen anything like it, up in a straight line. And I mean, look, hey, I just want to say hi to all the people who in 2021 and 2022 looked at me funny and told me I was weird when I was buying silver bars for $20 an ounce, 22. I even got a few in the teens. Everybody's like, oh, okay, boomer, with your shiny pet rock. I like non-fungible tokens or I like Peloton stock. All right. Yep, that's me. I'm that weird guy. How you like me now? I'm going to flash my America bar because we're sitting here at 92, 91, $92. We're going to 100, guys. I mean, at this point, the market is just dead set on that 100 number. Are we going to touch it, bounce off it, and head right back lower? Or are we going to smash through it like we did the 90s, like we did the 80s, the 70s, and 60s? I mean, we didn't spend very much time in any of those decades. And that kind of sucks because I hear the 70s was awesome before my time. The 80s was a good time. The 90s were over before they started. I don't know. What happens at 100? We may find out very soon here. Also, we got some mainstream media finally starting to pay more attention to this. We'll talk about what they're saying in the mainstream about gold and silver. Remember, guys, when the cab driver and the shine boys start talking about precious metals, that usually means who's the next buyer on the margin. There isn't any. So we're approaching that level now. It's not outright FOMO yet, but we're getting there. So keep your wits about you. Also, we had a super chat yesterday about a margin increase at the CME that I didn't have a very good answer for. I circled back on that one. We'll talk more about that as well. They are raising margin requirements on an ongoing basis, as a matter of fact. Either way, guys, I like the shiny. You may have heard that once or twice. We've got other news coming out this morning. Speaking of increasing money supplies and inflation, we got the Producer Price Index, or the PPI, came out this morning. Let's get the asterisk out of the way. This is old data. October and November PPI were just released. That's funny. It's January. Hey, government, keep up the good work. The government shutdown obviously delayed that a little bit. That being said, PPI moving steadily higher, September, October, November. What's going on there? I don't know. Is it this rally in commodities? Perhaps. We've had a lot of base metals that are going up along with gold and silver. Obviously, tariffs is a big one. Maybe labor costs contributing. Either way, producer prices are on the rise. We also got bank earnings this morning from three big ones: Bank of America, Wells Fargo, and Citi. Bank earnings have, so far over the last 2 days, have been good to mixed. Mostly good. but the stocks aren't doing so great. JP Morgan reported what looked like pretty good numbers yesterday, but that stock sold off 4% on the news. This morning, we've got Bank of America, a lot of income from equity trading. Net interest income was up, but that stock is down. Wells Fargo took a big charge for severance. They laid off 5,600 people, so that ate into their earnings. The one silver lining this morning is Citigroup earnings came out, an 84% spike in investment banking revenue over at Citigroup. That stock is up this morning, but so far earnings season is off to kind of a meh start. Banks not exactly blowing us out of the water with the numbers, which have been good, but not great. And again, the market is priced for perfection. We've also got a story about retail traders piling into memory stocks. Wait till you see the move in SanDisk over the last year. Look, Sam Altman and his gaggle of globalist, elitist a-holes are buying up all of the memory in the world. There's none left for computers. Has anybody tried to buy a laptop or a new computer or, God forbid, some RAM sticks in the last couple of months? Yikes at what those prices are doing. The gamers are pissed. Micron pulled out of the retail memory market entirely because the data centers are buying everything up. This is the law of large numbers. They have consumed all the chips, all the electricity. They're going after the water, all of the capital in the world, now all of the memory. But hey, let's just keep pretending like we can maintain this ridiculous growth rate year over year, and all of these resources will just magically appear out of thin air, right? No, it doesn't really work like that. Also, we have two interesting stories about Nvidia this morning, and I found this pretty odd. Nvidia and their H200 chip sales to China. The U.S. is supposedly clearing a path to make it legal to sell those H200 chips into China. And then there's this other story that says that doesn't even matter. So we'll talk about both of those and some interesting Nvidia news this morning. Full disclosure, I am personally short Nvidia. We've also got an article about a slowdown in Venezuelan crude oil reaching China. A big reduction. Ever since the U.S. blockaded Venezuela, started seizing those Russian shadow fleet tankers, there's a marked decrease in the amount of Venezuelan heavy crude and fuel oil reaching China. We'll talk about just how much, and we'll also talk about why that's not necessarily such an emergency for the Chinese, although ultimately it means prices probably heading higher. And we've got a crazy, crazy story out of Turkey this morning. And apparently this isn't new news. This has been going on for a couple of years. I'm just hearing about this. This new Turkish grocery chain called Yenir that sprang up in 2023. And Yenir loosely translates to edible. That's the name of the company, as if to suggest like barely edible. And this company, wait till you hear this specialty, what this company specializes in and how they've made a name for themselves. And the fact that they are growing big time and expanding, and they just raised more capital for what they're offering. It's a warning. It's a cautionary tale to the money printers, to the Zerpenbers, to all the people who are trying to like either subpoena Federal Reserve officials because they won't cut rates enough. And by the way, F you to the Federal Reserve officials because of what you've already done to people. Wait till you see what's going on in Turkey. Is that where we're going before we get our wits about us? And meanwhile, we're looking over at silver breaking into the 90s. I'm beginning to think these two things just might be related. Call me crazy. Guys, we have got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. Don't forget that like button. You new guys, hit that subscribe button right next to it so you can come back tomorrow and have your coffee with the melon heads because we do this one every single day. And right now, the S&P is in the red this morning, down almost 0.5%, 31.5 points to the downside for the S&P. The Dow is also down, albeit not as much, about 0.33% lower, off by 166 points ahead of the open. And the NASDAQ is leading the way lower, down 0.2%, off by about 165 points, also near the lows of the morning. Meanwhile, the dollar is a little bit weaker this morning, 98.98, off by 21 basis points. We had a little bit of jawboning by the Japanese finance ministry last night. I don't have an article to that effect because I cut it for length today. but the finance minister was basically out threatening to intervene in the Forex market, which is a verbal intervention, right? When you threaten to intervene, you're intervening. And he came out and they were sending a warning to the evil speculators who were depressing the yen. Oh, certainly it's these evil speculators and their risky trading and their gambling and their greed. Certainly not anything to do with our government money printers and the debasement of the currency that's been going on for decades. Oh, no, it's the speculators, right? Kind of like President Nixon in the United States in 1971, right? Remember, we had to pull the dollar. We had to close the gold window, pull off the gold standard in order to defend the dollar against the speculators. And here we are, nearly 55 years later, and we're still defending the dollar against those rascally speculators. Why, man, they are persistent, aren't they? Certainly, it's got nothing to do with the desire of the government to endlessly print money to fund wars and expansionist policy and whatever, all that elitist crap that makes them rich and us poor. Nope, it's the speculators. Nothing to see here. Anyways, that's what the Japanese did last night. They were warning speculators. That sent the yen a little bit lower or a little bit stronger, and sending the yen a little bit stronger. The threat of intervening, that is what is weakening the dollar here. The yen is a big input into the DXY. Man, that was a long-winded Dixie trip today, wasn't it? All right, let's look at the bond market. The 30-year yield is off by a fraction of 4.825%. The 10-year yield, 4.168, also off by a fraction of a point. The 2 years at 3.524, off by almost a half a point. And the 1 month is off almost 1 point, 3.619. Once again, bonds going a whole bunch of nowhere. Looking over at Bitcoin, it is along for the ride with silver this morning, $95,440 for Bitcoin. It's showing a big candle. The big move was yesterday, pretty much. We went from 91 to 95 yesterday, holding that level thus far this morning. The debasement trade is all the rage on Wall Street this morning. And once again, it's the commodities board where the magic happens. Spot gold, $4,633, up another $47, almost $48, 1% higher, hitting an intraday high of 46.41. February COMEX gold futures are at 46.42. That's up by another $43 or 0.94%. And there it is. Thank you. We went right back to that level, 92.00. Oh, come on, give me my 92 back. There it is. $92, up another $5.08 this morning, 5.875% higher for silver. March COMEX silver futures not far behind at 91.93, up by 5.58 or 6.45%. You may note slight backwardation still. The London spot price is at $92. That's about 11 cents higher than the New York price. So it's still indicative of a supply stress forming in London. That's something to keep an eye on. Not as bad as we got in October. We went like $3 deep into backwardation back in October. That was nutty. But we have been flirting with this backwardation level for a couple of days now. Oh, by the way, I like the shiny. I don't know if I mentioned that. Copper up another 0.2%. Platinum is up 1.9%. Palladium, the only metal, down 0.9% this morning. And crude oil is higher again, 61.60 for February WTI futures. That's up by another 45 cents or 0.75%. The ongoing protests and the killing of protesters in Iran appears to be moving oil prices here back into the low 60s. Keep an eye on that story, guys. There's a lot of planes moving, military assets shuffling on the ground in the Middle East, threats being lobbied, lobbyists back and forth, everybody talking, trying to sort out whatever's going on. I would not be surprised to see another military action in Iran if things keep going that way, and the oil market is starting to smell that as well. Now, let's look at some of the silver charts here. And look, guys, this chart doesn't really tell me much. It's just so damn nice to look at, isn't it? I mean, that 48.17 level there, that red line, that was that 50-year cup and handle pattern. And, well, we waved bye-bye to that back in December and never looked back. I mean, we're up another $40 and change from that level. Good God, this move. And, the other thing to keep in mind, guys, is, yeah, we've saw this nice move, but now that nice move is steepening. We are into another phase. We're rising even faster here. I don't know where this goes. I'm pretty sure it's going to 100. What happens at 100? I don't know. Kind of like I didn't know what was going to happen at 50. Were we going to reject that 50-year cup and handle, or were we going to blow right through it? We got our answer. We blew right through it. Are we going to do the same thing at 100? I hope so. Don't threaten me with a good time, but I don't know for a fact that that's going to happen. I can tell you people are out there just throwing out wilder and wilder numbers. Silver will be 300 by the year end. It'll be 500 by year end. It's going to be 50,000 by the end of next year. Nobody knows. But, man, that is a fun chart to look at, isn't it? Gold's looking good, too, 46.33. Now, the thing I like here, and this is what gives me a little bit more confidence in this silver move. Silver's always going to be more volatile, but gold is marching up in a much steadier pattern here. Gold is not going vertical. Gold is just grinding higher up and to the right. That tells me this move in silver can continue, at least for the time being, until I see gold break down from this trend that we've been in since the start of last fall. Maybe we can keep going here. And even as this is happening, the gold to silver ratio continues to compress, 50.3. And no, I still have not done my silver for gold swap at my local coin shop that I've been meaning to do, because I sit in front of this screen staring at charts and reading articles all day until my eyeballs bleed and I need to get out more. But that being said, I would really love to go swap some of my silver ounces for some gold ounces here, because most of my silver ounces I bought when the GSR was up here around 80, 90, even 100 to 1. And now here we are at 50, threatening to break into the 40s. And again, guys, just, some historical context here. If we're going to zoom way out on the chart, we're going to the weeklies here. We're going all the way back to the 1980s. It was a good decade. The gold to silver ratio went as low as 30 in 2011. And the gold to silver ratio went as low as 13 in 1980. So even at 50, silver could still have room to run. Now, 2011 and 1980 were both extreme examples, not normal. There's nothing that says we're definitely going to go to those levels. But that being said, we're kind of like in the region where we spent most of the earlier part of this century here, in this 40 to 65 range. If we keep going any lower, silver could go lower here. That's the point I'm making. Even with this ridiculous run that we have had, and it is ridiculous. I mean, silver's supposed to be a boring trade. It's not supposed to go 20 to 90. That being said, it could keep going here, guys. The GSR could be cut in half and still be only about where we were in 2011, which means gold could trade sideways and silver could go to $180, and it would be roughly in line with what silver did in 2011. I'm not saying it's definitely going to happen, but it could. All right, let's talk about what the mainstream is saying about the metals this morning, because it's nice to see, like, when the mainstream finally starts covering it. That's like when now I'm starting to get a little cautious. Blistering metals rally sends gold, silver, and copper to records. This one in Bloomberg this morning. Metals extended their dramatic start to the year with gold, silver, copper, and tin all hitting record highs. Congratulations to all those tin stackers out there, as investors bet on a boost from more U.S. rate cuts and a revival in sentiment across Chinese financial markets. I hear a lot about China these days. Commodities have posted eye-watering gains since late 2025 as traders position themselves for a year in which the Federal Reserve is expected to cut borrowing costs further to bolster U.S. growth. That's aided the case for base metals, while precious metals are also benefiting from renewed attacks on the Fed by President Trump and increasingly tense geopolitical backdrop. I think those actions by Trump, the story, Jay Powell's video for Sunday night, absolutely playing a big role in this move in metals we're seeing this week. A speculative frenzy in China has helped turbocharge the metals rally, with traders and deep-pocketed funds piling into commodities like copper, nickel, and lithium. Trading volumes on the Shanghai Futures Exchange have been elevated since late December, and total open interest across the Shanghai Futures Exchange, 6 base metals, hit a record on Wednesday. And shout out to the happy Hawaiian who called that one out in this tweet. Silver has broken 100 in China, that is. Shanghai silver futures have finally crossed into triple-digit territory, roughly an $11 premium to New York. And really nothing to glean from this other than, hey, yeah, we got triple digits. Yay, $100 in China. Meanwhile, CNBC is talking about mining stocks, all right? I mean, just to show you how far we've come. Remember, in 2021, silver stackers were those crazy nuts who were too stupid to be in control of their own money, and somebody should do something. And, oh, thank you, Ralston Benham, for tamping down the enthusiasm. Now here we are, CNBC's pumping mining stocks. Silver mining stocks jump as metal holds above $90 milestone. Shares linked to silver strengthened on Wednesday after the metal hit another record high and held above the $90 threshold. On Tuesday, spot silver, which outperformed gold last year with a 150% annual gain, it's beautiful, crossed over the $90 an ounce mark for the first time. It was more than 4% higher at 90.55. These are like 2 hour ago numbers. We're talking 92 now, baby. Come on. Silver futures for March delivery, meanwhile, still using that 90 number. In pre-market trade, U.S. listed shares of Hecla Mining, which I own, yay. They own the Greens Creek mine in Alaska, one of the biggest silver mines in the world. They jumped 3.4%. Endeavor Silver, 3.3% higher. First Majestic was last seen trading up 3.2%. Coeur Mining, that's the second time in 2 days I've heard of Coeur Mining. The operator of the Rochester mine in Nevada gained around 2.9%, while Silvercorp Metals and Tech Resources added 2.6 and 2.3% respectively. Wheaton Precious Metals up 1.5%. The miners are up across the board here. Exchange-traded funds related to the silver industry also rallied. The Aberdeen Physical Silvers ETF rose 4%, while the iShares Silver Trust, which I own call options in, that one jumped 4.2%. And the ProShares Ultra Silver ETF surged 8.2% higher. Guys, the metals are just ripping here. And BlackRock is talking about silver this morning, too. They expect silver to continue its upward trajectory this year. Our long-term view on silver is positive, but it's important to remember silver is more of an industrial metal than gold, Hambro told CNBC. And by the way, I do not think it is the industrial demand that is driving this. I mean, people love to talk about solar panels and electric vehicles and this fake talking point that there's like 500 pounds of silver in a Tomahawk cruise missile. There isn't. There's some silver in the batteries of these things, but that's about it. That being said, this is monetary demand is driving this 100%, and the short squeeze in the futures market, 5 years worth of supply deficits, sure, but those deficits have been there for 5 years and we didn't get this vertical move. This is all monetary debasement, in my opinion. We expect 2026 returns to be driven by how company management teams allocate the increased cash flows. Should there be ongoing discipline, such as a massive dividend increases rather than overinvestment or M&A, this will differentiate miners in 2026. BlackRock seems to be suggesting here, or this Hambro guy at BlackRock suggesting that they prefer miners who are going to increase their dividends versus maybe go out and I think what he's suggesting is that they would overpay for mergers at these valuations. So pay attention to your miners. Not all miners are created equal. There are plenty of shysters and scam artists in the mining space. Look for the ones that pay a nice divvy. That's all I can say. By the way, I want to send a shout out again to Joel Z, who sent me this super chat yesterday. Said, do you know, I didn't have a good answer for him at the time. He says, do you know anything about the new sliding scale silver margin requirements the COMEX was supposedly implementing? I had heard nothing about this, and so I didn't have a good answer. I circled back on this one. Thanks again, Joel. And it turns out that is true. We do have this new sliding scale. The CME put this out Monday morning, effective close of business Tuesday. So these new margin requirements are in effect. And what I want to zoom in on here, it's going to be hard to look at because this is a blown up Twitter image. But you'll notice here they're saying the new initial is now a percentage for gold futures for high risk profiles, 5.5%, where it used to be $26,400. For silver high risk profile, i.e. retail investors, it's now 9.9%, where it used to be $35,750. So number one, this is a margin increase. At the time this was implemented, 9.9% of one silver contract was more than $35,750. So it was a margin increase at the time. But the important thing here, this is for the first time they've ever done this. Now it's a percentage, not a cash value, which means this, as long as metals keep running here, the CME group is in effect raising margin requirements with each percent silver goes up here. As the value increases, so do the margin requirements. There won't be announcements of the next margin increase because every time silver goes up, the margin goes up with it. So these are ongoing margin hikes. We've never seen anything like this before, but you know what? This move in silver, we've never seen anything like this before. So thank you, Joel, again for the super chat yesterday. I apologize I didn't have a better answer at the time, but that is correct. We are now on a percentage basis. And also shout out to Bob Coleman, CEO of Idaho Armored Vaults, who posted this image yesterday. All right, we also got some inflation data this morning. Producer price index for the month of October and November. Hey, government, take your time. I mean, it's middle of January. Sure, if you have time, give us the October PPI numbers. Producer prices in the United States increased 3% in November. That's after increasing 2.8% in October and 2.7% in September. So we got the October and November producer price inflation, measuring inflation further upstream, and it is on the rise. That's interesting. We've seen CPI coming down, or at least going sideways, while PPI goes up. That is profit margins getting squeezed. I don't know what is directly causing this. Obviously, tariffs front and center in my mind here. I have to imagine tariffs are playing a role in this increase in PPI, probably commodity prices as well. Copper, remember, is at an all-time high. Copper's used in a lot of things. That'll drive PPI higher. And they also gave us core PPI. No core PPI for October. Thank you, government shutdown. But we do have core PPI for November. Big jump in core PPI. We went from 2.6 in September to 3.5 in October. So if you strip out food, you strip out energy, big jump in producer prices for the month of November. Just goes to show you guys, even though we reported CPI earlier this week or yesterday, it wasn't terrible. PPI still not looking so good. And again, the asterisk, this is data that was measured in or around the government shutdown. What have they done with that data in the 2 months since that ended? You got to take all this with a grain of salt. Shout out to Lux Ganapathy from Unicus Research, who mentioned data throttling as one of her big risks to the market for 2026. All right, we also got bank earnings this morning. Bank of America tops estimates as trading beats and lending revenue rises. Bank earnings have been mixed, and they're mixed once again this morning. Bank of America traders posted a strong fourth quarter as the company reaped benefits of volatile markets, and net interest income topped analyst estimates. Revenue for equity trading rose 23% to $2.02 billion in the final 3 months of the year. Analysts had been expecting equity markets revenue of close to $1.9 billion, so it was a pretty big beat there. That helped give Bank of America earnings of 98 cents a share, topping analysts' estimates. While with consumers and businesses proving resilient, as well as the regulatory environment and tax and trade policies coming into sharper focus, we expect further economic growth in the year ahead, said CEO Brian Moynihan. While any number of risks continue, we are bullish on the U.S. economy in 2026. Volatility has whipsawed markets since President Trump announced tariffs and trading partners around the world last year. That's been good news for markets business at Bank of America and its rivals across Wall Street, as they benefited from a surge in client activity as investors repositioned their holdings. The second largest U.S. bank also said the net interest income, a key source of revenue for the company, rose 9.7% to $15.8 billion. Analysts had expected a 7.8% increase in net interest income, the revenue collected from loan payments minus what depositors are paid. So pretty good numbers from Bank of America here. And the stock is down 2.8%. That's interesting, maybe because Bank of America has had a pretty good last 12 months or so, up 21.8% over the last year. But those numbers look pretty good to me, unless there's something else in the earnings release that I didn't catch. Not really sure why this one is down this morning. Meanwhile, we got earnings from Wells Fargo, and we can see why Wells Fargo is down. Wells Fargo profit hit by severance as headcount drops by 5,600. More layoffs at Wells Fargo, who missed analyst profit estimates as severance costs drove up expenses and net interest income fell short. The bank spent $612 million on severance as part of a plan designed to cut costs. Expenses climbed to $13.7 billion compared with $13.6 billion that had been predicted. We have built a strong foundation and have made great progress in improving growth and returns, meaning we're cutting heads off, though we have operated with significant constraints, CEO Charlie Scharf said in a statement referring to the asset cap imposed by the Federal Reserve that was lifted in June. We are excited to now compete on a level playing field. Wells Fargo, remember the fake account scandal from like 10 years ago? They've been limited by how big they could get. That cap has since been removed just recently this year. So now they're like, yay, we can start growing again. We're working on our next fraud. Big things on the horizon. Scharf said last month that he expected higher severance expenses in the fourth quarter as the bank continues to lower its cost base. The company has been shrinking headcount for years in a bid to increase efficiency and had almost 211,000 employees at the end of September. That figure was just above 205,000 at year end. Net interest income, a key source for profit from lending, was $12.3 billion in the fourth quarter, lower than the $12.4 billion expected. That brought full year net interest income to $47.5 billion, coming close to its guidance for 2025, not quite hitting it. So not good results from Wells Fargo. That stock down $4.5% here, off by $4.20, trading around 89 and a quarter. Joining JP Morgan and selling off more than 4% on earnings. Last bank of the day, Citi's M&A fee haul surges 84% to cap record deal-making year. So Citi was the silver lining in these earnings this morning. After years of lagging behind peers on Wall Street, Citigroup's deal makers are narrowing the gap. CEO Jan Fraser's last bank posted an 84% surge in financial advisory fees in the fourth quarter, capping a year in which the firm's revenue from handling mergers rose by more than half to an all-time record. The haul, announced in an earnings report Wednesday, defied larger rival JP Morgan's relatively sluggish growth in that business, which was up just 6% in 2025. Citigroup, which has long struggled to break into the top three deal-making shops, is now making progress under Vis Raghavan, whom Fraser poached from JP Morgan in 2024 to build up the investment banking franchise. Total fees from that unit, including debt and equity underwriting as well as M&A, rose by more than a third to $1.29 billion in the quarter, still overshadowed by JP Morgan's $2.35 billion. Altogether, higher revenue from bankers and services groups business that moves money around the globe helped boost Citigroup's adjusted earnings per share to $1.81, almost 20 cents above the analysts' estimates compiled by Bloomberg. The New York-based firm's return on tangible common equity, a key metric of profitability, also beat their expectations. Really good earnings from Citigroup. What did they say on their conference call? Look at the stock dropping at the open, down 0.5% on spectacular earnings. This was up 2.5% before I went live. So I'm not sure, did they say something on their earnings call, or did the markets just open up and take a dump? I don't know. Doesn't look like the market is dumping at the open. Actually looks pretty stable at the open. So not sure what happened to Citi there. For all intents and purposes, the stock should be ripping on that earnings report. That was a great number that they just posted. Also going on this morning, retail traders pile into memory chip makers as AI boom squeezes supplies and lifts prices. You know, guys, that's the story right there. The title says it all, so we're not going to read too deep into the meat and potatoes of this article. People are buying these stocks like crazy because the AI bros bought up all the memory, and now there's not enough memory for retail consumers, for PC gamers, and for anything. And so memory prices are ripping, and memory stocks are ripping along with it. That's the story. I mean, they're already using all the electric. They're already gobbling up all the capital that's available in the market to build these stupid data centers. Now we're out of memory. And by the way, they can't make enough memory. How are we going to keep up this data center growth if we can't make up the memory? You know what? Who cares? Numbers, math, reason, silly me. I'll see myself out. I know. But take a look at what SanDisk stock has done over the last 12 months. All right. Now it's down this morning 1%. Cry me a river. Up 1,011% since January of last year. This thing has 10x'd. You think there might be a memory shortage? You better believe there is. I heard a lot about Micron over the last few months when they exited the retail business. Did not hear a lot about SanDisk. $386.70 for SanDisk. Yikes. All right. Meanwhile, we've got some Nvidia news. And let me just preface this by saying, full disclosure, I am short Nvidia, as I have said often and loudly. U.S. clears path for Nvidia to sell H200s to China via new rule. This one breaking just last night in Bloomberg. The Trump administration moved closer to allowing Nvidia to sell its H200 artificial intelligence chips to China by issuing revised criteria for winning U.S. government approval to ship the processors to Chinese buyers. Under a regulation published on Tuesday, the Commerce Department said it will review applications for AI chip exports to China on a case-by-case basis. easing a previous U.S. stance, pressuring denial of any request for permission to sell to customers in the Asian country. The measures set licensing requirements for Nvidia and AI chipmaking rival AMD, which is seeking clearance for sales of its MI325X chip. The stipulations include certifying that there's no shortage of the processors in the U.S. Companies seeking export approval must show that production for Chinese customers won't displace manufacturing capacity that could be used to produce chips for domestic buyers. The companies will be constrained in how many chips they can ship to China, with a limit of no more than 50% of the total products made for the U.S. market. Under the rule overseen by the Commerce Department's Bureau of Industry and Security, or BIS, companies must also employ rigorous know your customer procedures to prevent unauthorized use of the technology. All right, so the government says it's okay to sell H200s to China. And here's why I don't care. China doesn't seem to want them. China's customs agents told NVIDIA's H200 chips are not permitted, sources say. This one updated just an hour ago, breaking at the same point. Chinese customs authorities told customs agents this week that NVIDIA's H200 artificial intelligence chips are not permitted to enter China, according to 3 people briefed on the matter. Chinese government officials also summoned domestic technology companies to meetings on Tuesday, where they were explicitly instructed not to purchase the chips unless necessary. 2 of the people and a 3rd source said. The wording from the officials is so severe that it is basically a ban for now, though this might change in the future should things evolve. So that kind of spun on its head quickly. We went from we're not allowed to sell chips to China, and the Chinese are smuggling them in using Singapore and Malaysia as intermediaries. Now the U.S. is saying, okay, you can sell the H200s, and China's saying, no, now they're banned after we smuggled them for years trying to circumvent the export controls. Kind of a crazy combination of stories here. NVIDIA stock down 1.85%, trading at $182.37. All right, we got 2 more quickies here. Venezuelan oil exports to China set to drop as U.S. blockade limits cargoes. We know about the blockade. We know about the tankers getting seized. We've been talking about this a lot for the last few weeks. Let's get right to the numbers since we're a little short on time. The 5 million barrels of fuel oil and crude set to arrive in China is equal to about 166,000 barrels per day. That is down from the average of 642,000 barrels per day of crude oil and fuel oil Venezuela exported to China in 2025, or 75% of total average exports of 847,000 barrels per day last year, according to internal PDVSA documents. So oil flows from Venezuela to China are down by 75% versus last year since that blockade went into effect. And they're probably going to head lower still. They're seizing the tankers. And, there was a lot of oil on the water at the time the blockade went into effect. That oil is now reaching China. But I would not expect skyrocketing oil prices in China anytime soon. China has stockpiles. They've stocked up on Venezuelan oil late last year, while millions of barrels are still in transit, which means Chinese refiners are not in a rush to seek alternative supply. Just goes to show you that the U.S. now has a greater control over the flow of oil here. Venezuela was selling most of their oil to the Chinese. So have the Iranians. That Iran story, the protests ongoing in Iran, that's important. China would get very nervous if we were to see the Ayatollahs fall in Iran. That would basically leave Russia as their only oil-producing friend left in the world. And although they're building pipelines from Russia, vast distances across thousands of miles of desert via pipeline, not a very efficient way to move oil. So China could find themselves with oil prices here, oil problems here, especially if it ever came to a conflict over Taiwan and a naval blockade of the first island chain. It'd be hard to get oil into that country in that situation. Again, what happened in Venezuela earlier this month, guys, was really, really significant. And last but not least, Turkey's inflation crunch spurs a rise of salvage grocery chain. Look at how far they have fallen in Turkey. This is a cautionary tale. And again, in the context of $92 silver, let's keep in mind we could get here someday, eventually, guys. It's still a long way off for the U.S., but it could happen. Turkey's cost of living crisis has given rise to the country's first salvage grocery chain as shoppers squeezed by years of high inflation hunt for cheaper food. Yenir stores, which means eatable in Turkish, sell near expiry or past best buy products sourced mainly from major grocery chains. I guess eatable tested better in focus groups. Dumpster Diving Inc. didn't go over so well with shoppers, apparently. The startup Yenir Technology AS opened its first store in Istanbul in late 2023 and now operates 5 locations across 4 cities, catering largely to urban wage earners whose purchasing power has eroded. Turkey entered an inflationary spiral in 2021 after the central bank began cutting interest rates despite rising prices. Oh, that's interesting. That's what we're doing. Pushing inflation above 85% in 2022 as the lira weakened sharply, while tighter monetary policy following President Recep Tayyip Erdogan's 2023 re-election has slowed inflation to just 30.9% by the end of 2025. The burden on households remains heavy, with food prices up nearly 7-fold since 2021. Our target isn't people who are destitute. This is what's crazy. They're selling expired food, and listen to how optimistic they are. Our target isn't people who are destitute. It's middle-income, white-collar masses. This is the managerial class they're selling this modestly expired milk to. Chief Executive Officer Servet Akdogan, I don't want to mispronounce the guy's name, said in a phone interview, customers mostly seek staples such as milk, cheese, eggs, and cooking oil, he said. Official data show that the strain on that group, the combined income share of Turkey's 3 middle quintiles, declined in 2025 compared with 2021, while the top 20% increased its share to 48% from 46.7%, according to Turkstat. Loosely translated, that last paragraph, inflation makes the rich richer and the poor poorer. All right. And hey, here in the States, we have a mandatory 2% inflation target, right, at the Federal Reserve, which means the rich need to get richer and the poor poorer at a rate of at least 2% every year. It's documented policy. They'll say this out in the open, shamelessly. Why 2%? Because that is the temperature at which the frog does not realize he is being boiled alive by inflation. And yes, in this metaphor, you are the frog. Slightly expired milk, eggs, and cheese in Turkey. Gotta love it, man. Where is this world going? Hey, I just want to say thank you very much to Able Perfectionist for becoming a YouTube member. Thank you so much, you Able Perfectionist. You appreciate the support of the channel. Just a reminder, guys, YouTube members get a free super chat every month. Use that. I will read and respond to your questions live on the air. Armando Reyes, thank you, sir, for supporting the channel. Says all of that fraud and theft in SOV and ETFs are finally coming to light. Say no to bank bailouts. I always say no to bank bailouts, but the bank bailouts are coming, Armando, one way or another. I mean, look, call me a hopeless romantic. I wish we wouldn't bail out the banks when they fail. But they have shown us time and time again that they will cut and print and bail out every single time. This time, I have no reason to expect this time will be different. That being said, on the thing about SLV and the ETFs, the one thing to keep close eye on is that arbitrage between London and COMEX prices. If you see the spot price rising sharply higher than the COMEX price, like we saw in October and November, that means the ETFs could be on shaky ground there, because most of those silver ETFs, they keep almost all of their metal in London. And if we see a big price premium in London, that means the temptation is there to rehypothecate that SLV silver, to basically go sell it twice. All right, so keep an eye on that backwardation. It's only 10 cents right now. That's not a big risk. But also know what you own when you own one of those ETFs. And look, I own call options in the SLV ETF. I don't actually own silver. I own price exposure to silver. You're not going to get the metal. If you buy shares of SLV and try to go redeem it, you're not on the list. You're not in the club, so you won't get it. So know what you own. Thank you, Armando, for supporting the channel. Espresso Beanies 8930 says, thanks on the call out on Ruben. It was the consumer grade cards delayed late 2027. All right, so Ruben, I'm guessing we're talking about the new Nvidia chip. I didn't know that they have delayed their consumer cards to 2027, so they're gaming GPUs. I did see a story about a reissuance of the 3090, which, by the way, that's the GPU that my computer runs on, the old RTX 3090. Yes, I use an Nvidia GPU to bring you these live streams. I am truly a hypocrite, am I not? You're welcome. I take it Espresso Beanies as a gamer. Look, Nvidia has screwed over the gamers, and the gamers are pissed. You think I'm kidding? Turn on Gamers Nexus and listen to that guy talk about Nvidia for 5 minutes. It's just music to my ears. It's a symphony of hate on Nvidia. Once again, guys, I am short Nvidia. Thank you, Espresso Beanies, for supporting the channel. James Richter says, I like the shiny. I'm Jack Gamble, and I approve this message. Thank you, James, for being a Melonhead member for 4 months. Armando Reyes is back again, says, this isn't a shared opinion, but I would like to see countries dumping more bonds and treasuries. Careful what you wish for. I think we will see that. And we are seeing that. The share of global reserves of gold is on the rise. The share of global reserves of U.S. treasuries is in decline. But understand what that means, Armando. If you have anything in the bank anywhere, you're in U.S. treasuries, whether you realize it or not. Most ETFs are required to hold a major portion of their funds. Like, right, if you own a single stock ETF, chances are that single stock ETF is invested in call options in that stock and then U.S. treasuries for about half of the money. So there's a lot of exposure to U.S. treasuries there. This is happening. We are seeing it happen, but that's not necessarily a good thing. It's a medicine the world needs to take, but taking your medicine sucks. I think a lot of people who call for this don't fully appreciate the mayhem that's involved here. It's long overdue. Some might say inevitable, but it's not going to be fun. I can tell you that, Armando, but it's probably coming. What a mess. What a mess we've made. Thank you, Armando, for supporting the channel. Nashville Pasta Man says, bank runs always start with small lines. Yep, small lines have a funny habit of becoming big lines. Now, Pasta, I've heard this. We've mentioned this a few times. I don't think we've mentioned this on the air at all. That what we're seeing in gold and silver is a bank run in disguise. That's interesting. I'm not sure that translates literally, but what are we seeing? We're seeing an increasing number of people are taking their savings out of the financial system and putting them in the metals. Now, we didn't see that for most of this previous run-up, right? We saw gold and silver premiums were actually lower, much lower than they had been for years, which meant the stackers were selling into this run. Between 30 and 70, the stackers were net sellers. Actually, between 30 and 80, really, the stackers were net sellers, mostly between 30 and 70, which means actually the banks were running on silver, right? The metal was flowing from the retail silver stackers back to the banks, and the money was flowing from the banks to the retail stackers. Then we got to 70, and the stackers showed up and started buying again. So now we've got people pulling their savings out of the banking system and putting it into physical metal. And we're seeing premiums explode higher. Premiums on American Silver Eagles were like $13 yesterday. 2 months ago, they were $2. So premiums are blowing out here. Now it resembles more of a bank run. But again, the stackers were net sellers for most of this run in silver. So for a while, the banks were running the stackers the other way around. Thank you, Pasta Man, for supporting the channel. Wee Willification says, proud member of the Weirdo Club since '88. Wow, since I was but a wee lad, you got me by a couple years. I was a late arrival to the Stacker Club. But congratulations, sir, on your multi-decade weirdery. Winning, doing it right, brother. Thank you, Wee Willie. Appreciate the support of the channel. Armando, again, says silver will never get to $500 or more. The powers won't let it. Well, people said that about 100. We're getting there fast, Armando. Corporations won't pay that. Nothing would be affordable if that happened. It's all context, right? We're talking about 500 today dollars. 10 years from now, what's $500 going to be worth? A can of beans? I couldn't tell you. I agree, $500 remains very, very far-fetched right now. And the point that you're mentioning there is an important one. Corporations won't pay that. That's an important point. At what point does demand destruction occur for some of that industrial demand in silver, right? If silver prices keep running higher and higher, is silver going to be used in batteries? Is silver going to be used for switch contacts, for solar panels, or are they going to make a less efficient product and start replacing it with copper? We could be nearing the point of industrial demand destruction in silver here. I don't know. It's not a threshold where like we flip a switch at $92, all of a sudden they stop using it. It's going to be more an incremental thing. The higher it goes, the less and less industrial demand there's going to be. Thank you, Armando, for supporting the channel. Once again, Harmonair LLC, thank you, sir, says, don't threaten me with a good time with my pet rock. Yep, me and my pet rock laughing all the way to $90 here. Shout out to all you weirdos out there. I like the shiny. Thanks again, Harmonair, for the generosity, sir. And Mr. Hunt and Cover, thank you for the generosity. Appreciate the orange one, sir. He says, hypothetical. In a transition to a central bank digital currency, gross. Will precious metals hold their true value, or will other stores of value do better or the same? Crypto, stocks, bonds, real estate, etc. That's hard to say. It depends what they do with the CBDC. Because remember, central bank digital currency is programmable money. So you could just see, say, the WEFers of the world take over and force a CBDC on everybody. They could just say, this money is not allowed to buy gold and silver. You're not allowed to use it. We put a line of code in the currency that says it doesn't work for gold and silver, at which points the paper price of gold and silver will crater, but a black market will develop where people will start trading for gold and silver with other goods at astronomically higher prices. Price controls don't work. So there could be some kind of way they try to do that to suppress it. Honestly, I view a CBDC as more of a social engineering project than anything else. Oh, we're going to give everybody $1,000, but that $1,000 is only usable to put solar panels on your roof. And that's a way that they could drive demand for solar panels, things like that. Or they could say, if you don't get a shot that we want you to get, we're going to take money out of your account, or you won't qualify for this CBDC money. I mean, a CBDC is a tyrant's wet dream. Let's try to not limit our imagination on what they might do with it. That being said, a CBDC is not coming to the United States anytime soon, even though we got a lot closer with the Genius Act and the normalization of stablecoins. Still, we're a long way from a CBDC. There's a few reasonable people left in the power structure that will oppose that. Thank you, Hunt and Cover, for supporting the channel, sir. Blank Johnson 6934 says, have you heard of Prince Group scam in Asia? No, I haven't heard of the Prince Group. Is that like I'm an exiled Nigerian prince and I need help repatriating funds, or is this a new one? Gonna have to parking lot that one. The Prince Group scam. Have not heard of this one, Blank Johnson, but I'll have to look out for it. Thank you, sir, for the alert, and thank you for being a Melonhead member for 1 month. Raiden57 says, exit liquidity. What are we talking exit liquidity? What story was that in reference to? Got to go back over the banks. No, probably not the banks. Probably not Wells Fargo. Exit liquidity for the mergers and acquisitions, maybe, or retail traders. Honestly, when I hear exit liquidity, Raiden, I think of that story from yesterday about how the private credit is seeing a record request for withdrawals, and yet they have ample liquidity to meet those withdrawals because of all the new demand for private credit funds, i.e. pension money and retirement money from 401ks, mutual funds, IRAs, that kind of stuff. So when I hear exit liquidity, I think alternative assets is the one thing you really got to watch out for. Thank you, Raiden, for supporting the channel. Nashville Pasta Man once again says, if SanDisk was silver, economy would be collapsing. 1,000% run in silver. Would the economy be collapsing? Yeah, probably. Something would be breaking somewhere. And honestly, Pasta Man, let's go back to a year and a half ago. What was silver? Say $28 a year and a half ago, something like that. It was pushing 30. I probably would have said if silver goes to $92, something's going to break. So I kind of wonder what is going on that we can't see with a $92 silver price and a $4,600 gold price. There's always more happening than they tell us. Can't help but wonder what's going on. And that industrial demand can't be looking good here at $92. I mean, especially some of these products, if you make relays, you've got to drop a silver on every switch contact in that relay. Your costs are going up. You burn through a lot of silver every year. If you do printed circuit cards, your costs are going through the roof here. You're going to start making fewer. You're going to raise your prices, but the consumer won't eat those prices. So, yep, got to wonder what's breaking elsewhere. Thank you, Pasta Man, again for supporting the channel. Armando says China better wise up. That's if they don't want exploding pagers. I tell you, it's been a crazy year for intelligence coups. That exploding pager story was pretty crazy. Look, the big thing here, guys, this conflict in the South China Sea, you could argue it already started with that seizure of Maduro in Venezuela. All right, because one of the main tactics the United States, right, in an invasion of Taiwan, China will try to use overwhelming missile and air power and a naval blockade to try to just overwhelm Thai defenses as quickly as possible, right? It would be kind of like the initial surge into Ukraine, try to just topple the government instantly. Taiwan has the porcupine strategy. They know they can't defeat China. It's just about inflicting as much pain on the Chinese as possible that the Chinese give up the fight while hopefully somebody comes to their aid. That's their strategy. And then the U.S. strategy is, number one, to deny China the military blockade, big conflict at sea. Number two, to choke off China economically. China is surrounded, economically speaking. They cannot get any of their finished consumer goods out or any of the raw materials and oil in that they need without going through the first island chain, which is completely controlled by United States allies and the U.S. Navy. And I'm not sure the Chinese have a lot they could say about that if they decide to try to break that blockade. It would be bloody and it would be ferocious, kind of fighting we haven't seen on the water since World War II. But I'm not sure. Well, first of all, nobody wins that conflict. There are no winners, right? When young men are going to the bottom of the ocean feeding the sharks by the tens of thousands, nobody wins. It's just a matter of who loses the most. And I'm not really sure who that is. I don't know who loses the most in that conflict. There's still time to switch it off. It hasn't started yet. We don't have to start it. We're all acting like, oh, yeah, it's going to happen. They're definitely going to do it. I mean, maybe they decide not to. Stranger things have happened. Thank you, Armando, for supporting the channel. Bart Stapleton, thank you, sir, says just 2 days ago, the U.S. Mint had Silver Eagles for 91. Great show, Jack and team. Well, typically the U.S. Mint sells them for $3.05 over spot. That's like their manufacturing cost. So a couple days ago, we were probably around $87, something like that, 88. That's probably what got us to the $91 mark. Guys, Silver Eagles, $13 over spot now. I mean, the premiums have exploded higher. Silver it's weird. Typically, as price goes higher, demand is destroyed. See also the industrial demand that we talked about earlier. But with metals traders, it's weird. You get this FOMO. As price goes higher, you get the monetary demand actually goes up. People start to FOMO in. And I think we're in the FOMO phase now. When I saw that chart start to steepen 3 days ago, this is a FOMO rally. It's going to go to 100. I don't know what happens at 100. That's the level to watch there. But yeah, watch those physical premiums blowing out. And the one thing I would mention, guys, is that junk silver, 90% silver, still available below spot in some circles, at least as of yesterday it was. You can still get 90% quarters and dimes for less than spot, which means there is still no actual shortage of silver because the refiners are not buying the 90% because they've got plenty of 3.9 fine to melt down. The refiners are not short of silver. Otherwise, it would be a lot more expensive to buy the junk. They're still being picky and choosy. That being said, the premiums on the refined products, the 3.9s, the Eagles, are blowing out here. There's still good deals on junk, though. Thank you, Bart Stapleton, for supporting the channel. Able Perfectionist says banks don't print money. They print currency. All right. A matter of, what's the word I'm looking for? Semantics here, right? Gold is money. Everything else is debt. So what do banks print? Banks print debt. That's accurate. We do use the word money interchangeably with currency because for 99% of people throughout their daily lives, there is no difference. Only we here who scrutinize the fiat system make such distinctions, and it's an important one. But you're right, Able Perfectionist. Thank you, sir, for supporting the channel. Enjoy $90 and change, guys. Thank you, everybody, for having your coffee with the Melon Heads this morning. Don't forget the like button and the subscribe button on the way out. Thank you so much for all the generosity in the super chats, as well as you magnanimous Melonheads on YouTube, Patreon, and Buy Me a Coffee. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.